Hey guys, I haven't done a market analysis for a couple of days. Apologize about that. Just been a bit busy with school and just working on a bot. Basically, I was making a bot made a trading bot. I've been working on it a little bit in MQL5 C++. It was going pretty good, not bad. The testing did pretty good actually. Not as good as I thought it was gonna do, but it still did pretty good. Because this quarter I'm getting like 100% return. Other quarters didn't get that as good, so it averaged out all right. Might be able to optimize a little bit better. I will be posting some videos on how to create, how to basically write to code those bots. I'll start doing a tutorial series when I can. So anyways, we'll just do a quick market analysis here. So we had the CPI numbers, I think, this morning. Just double check that. What happened there? Okay. Not the okay, so to get this, you just go to investing.com, click the economic calendar. Then I'll change to my time zone. Alright, so we're looking at today. So the CPI was unchanged, I guess, looks like. CPI was unchanged. Month on month, at least, was unchanged. Okay, let's see. Okay, so CPI numbers actually, I thought they were bearish for the US dollar. CPI is actually going up, so that means, looks like inflation might still be going up. That's not good at all, if that's happening. Then basically what they were saying, I guess you'll have to watch Bloomberg on this and get more analysis from those more fundamental, kind of the fundamental analysts. They'll have more discussion on that if you're interested. But basically, if the inflation is still going up and they've been doing rate hikes for so long, that's not good. That could be potentially leading to a harder recession, I guess. But as you can see, month on month, there is no change for the CPI versus the previous numbers. So the CPI year on year was still up by 0.1%. They probably should have gone. It was up by 0.1% for January, so it should have gone down. Previous was 5. Okay, so actually, I guess it did go down. It actually did go down, I guess, because I'm looking at the expected number. I guess there's a little bit, kind of a bit of a difference here. There's a core CPI and there's a CPI, so it looks like I guess it did go down a little bit. Not as much as they were hoping, I guess. It actually went up. So there's no change for the month over month. Yearly there was pretty much, it went down by 0.1%. It looks like 0.1% for the core CPI year on year for January. The CPI year on year also went down by 0.1%. Was higher than the expected by 0.2% though. I guess maybe that's why the market had the shock today. It still went down, so I guess if it's going down, the CPI, then that means inflation is going down, so forget what I said earlier. Maybe inflation isn't going down as much as the analysts thought. More so the economists, they don't, maybe the Fed as well, they don't think that it's going down fast enough. Perhaps that means that rate hikes could be here for longer than they expected. Maybe they were hoping to cut it off sometime this year, but maybe with this they'll have to go 0.25% for longer. We'll see what they want to do. Maybe they might even go back to 0.5%. So you'll have to watch the analyst's opinion. A good place to check that out if you're interested is on Bloomberg. You can watch that. You can get a link online, probably free if you just search around if you don't have it. If not, just maybe, yeah, so try that. If you, some people have it, so if you have Bloomberg, then just watch it. If you don't, just Google it, you'll find something, or use another search engine to find a link. So yeah, that's pretty much it. So that probably caused the... Actually, wait one sec. Just usually the market reacts to the expected reading, the expected numbers. So for example, for core CPI, there was no change. And then CPI, there was, looks like it was a little bit bullish for the US dollar. So that perhaps caused the major currency basket, US strength, to show some power. So that would have been around 6 o'clock. Yeah, so it would have been, what time did that come out? My time, it came out at 5:30, so it would have been during the 2 o'clock candle. Right there. So as you can see, kind of a mixed picture. Then kind of a fake out that usually happens. So you have a lot of people, especially retail investors, almost everybody, trading price action, which just causes them to get stopped out every day. I don't know why they do that. But basically the price action causes, they try to, even if you go to like the TradingView chat, you'll see people telling them, oh yeah, I trade a naked chart with price action. You'll see a lot of people on their stock tweets, probably most of the people watching this will say the same thing. Well, if that's the case, everyone would have went long and then got stopped out when it turned back down. That's the thing with price action. If you want to know a secret, use oscillators. Use oscillators to show you the momentum. And you have to play around with the math too. So once you can do that, you may be able to find some good settings that work, showing you momentum. So you have a look at this moment. Look at my momentum oscillator showing me that momentum was potentially slowing down after that, starting to come out of overbought as well on other oscillators and all that. So check out oscillators, momentum oscillators. You can even create your own based on other existing oscillators. And if you're still young and you have time, get into statistics, get into math, and get into computer science. Don't get into finance. If you're like, okay, well, I want to study. If you really want to do something, don't get in. If you want to work in the investing sector at the bank or something, you want to be one of those kind of people. You want to get into the industry, and you're in school right now. Don't take finance. People that did take finance, they'll understand why. Basically, not that I'm saying finance is bad. Like, finance is good for like stocks and stuff, learning how to read reports and all that. But the thing is, they don't really teach you too much about algorithmic stuff. Because banks, I'm saying if you're young, if you're already a finance major, you already know what you're doing. What I'm saying is for the young people out there, and not trying to saying the people that did take finance, oh well, is he saying don't take finance? I already took finance. If you took finance, I'm sure you'll get a job. But what I'm saying is that if you're still early and you're trying to decide to what sector you want to get into, I'd get into computer science and math and statistics. That would help you kind of learn how the algorithms work at the banks and stuff like that. They don't teach you that stuff in finance. Not trying to put down any finance majors out there. They have their own jobs, mostly reading like kind of earnings. They know how to evaluate earnings reports. That's the strengths that they really learn in finance, which is still good. And I don't know too much about that stuff. That's more of a securities kind of thing. Economics is good too. I took a few classes in them, but if you're taking an economics major, there's still jobs out there as well. But if you really want to learn about trading algorithms, I definitely go with math, computer science, statistics, and stuff like that. Banks really look for that for the development of new algorithms and stuff, for the foreign exchange managers and all that, the currency strategists. A lot of them are actually computer science majors and math majors and all that, statistics. So yeah, if you're interested in that, I'd probably do that kind of stuff. Otherwise, as you can see, the dollar strength had some pretty high volume after that once the report came out. As you can see, they started to sell off kind of hard there. Basically, US started to rise, so we'll look at the DXY. So as you can see, the DXY started to show some strength. Whoops, what time is it? 6 o'clock. Yeah, so in this candle, as you can see. Sorry, that's just a buddy of mine. Okay, so that's, so once basically when that report came out, they faked everyone out with price action. Then, basically the US dollar strength, started to rise. So once again, they faked everyone out with the price action. That's what they do. They just do that. They fake everyone out. They do that every day. They fake everyone out with price action, and then they eat your stops. The brokers and the banks eat your stops, and then they go short. It's the same thing they do every day. So the people trading price action, you'll never be able to actually know the trend before. You'll never be able to predict the trend. You're always following it, if you know what I mean. For example, here I'm seeing, okay, well, I'm starting to get some bullish momentum. I'm seeing that on the oscillators. Then I'm saying, okay, well, I'm starting to go long. Basically, then everyone's saying, okay, well, we want to go long here. Once the price action starts to break out, maybe around there, if you can see the crosshair, or maybe here. But then they get faked out. The banks go short here, and then you're caught here in a stop. They do that every day, over and over again. So if I were you, don't trade price action. Don't do that. That's just my advice. Some people may not like it. That's just the truth. So if you want advice, I'm telling you that's the advice right there. Anyways, we'll move on from that. We'll just have a look at cryptocurrency. So it's starting to potentially be bullish. As you can see, we got some momentum on the monthly chart. So once again, cryptocurrency is very risky. Financial instruments are risky as they are, but cryptocurrency is more risky because it's manipulated. Once again, whales are just buying and selling. They can control the market. They have power over the banks. They have power. People early on who bought cryptocurrencies, especially with altcoins and stuff, they control like a lot of banks don't even buy altcoins, so they're controlling the market. So one whale buys and sells, and they all buy and sell. They can shake the market with a news report such as FTX. So it's risky. You can see massive losses in a day. So just be careful. But if just from a technical perspective, may come back down and test a little bit down here, perhaps. But still, for the long term, it's not a bad area to start buying some, start accumulating. That's just my perspective. Same thing with Ethereum, I guess. Kind of started to move up. Actually, yeah, it's not too bad here. Tested down low a bit. So yeah, pretty much same idea for that. Oil still bearish, as you can see. Could see maybe another half move. We'll see. So maybe we could get down there to the 50s sometime later this year, maybe back to the 60s. So we'll see. Right now we're still bearish. We could check another. We have more time frames now. TradingView does more time frames. Yeah, so we're still potentially. So as you can see, last time we came down a bit more. So we could see a little bit more. Maybe another year or so of bearishness at least. There's still a lot of room down here for support. Just came up and tested this resistance earlier this year, so we could see a little bit more bearishness. Those longer term momentum oscillators are still showing a switch from bullish to bearish, and we could see some more movement to the downside, so just be careful if you're long energy. And I think we'll just finish it off there today. Actually, we'll do the stock market indexes quickly. Stock market index is potentially bullish once again, starting to see some bullish momentum start. Wouldn't be a bad idea. Once again, stocks are also risky as well, so just be careful. But looks like the market may, with the sell-off of the U.S. dollar, the stock indexes, U.S. stock indexes at least are starting to potentially be bullish. So that's S&P bullish on the monthly. Nasdaq 100, same idea, looks almost exactly the same. Potentially bullish, not a bad area to buy some. If you can get a better price, maybe it might not move down from here, so just be careful. 3 month. I mean, we don't really have too much downtrends in the market. Nothing since like 2000 to 2002. But just looking at the oscillators, starting to get down there, so it's not too bad of a buy area for the long term, it seems. So just be careful with those once again. Because if we just pick a stock, let's just pick a stock like Tesla or something. If you do see, if you just check it out for a sec, you'll see that it had a quite a sharp sell-off. Not a bad price to be buying in there. Those people got lucky. But yeah, I guess you kind of just have to follow the market index. Each sector has its own problems. Like for example, Tesla, we have other competitors coming out, like Ford and all that are coming out with their own electric vehicles. So Tesla potentially losing some of its market value over the long term. But from a day trading perspective, that was pretty, once again, it is risky. Stocks are especially risky. Elon Musk has a lot of pull. But that was a hard one, to be honest, even for me. See, the thing is, algorithms don't work that well with stocks because they're so low volume. And they're kind of manipulated, so you just have to be careful. But if you look at the overall index and from a monthly perspective, you can see that the potential to move up is higher. It did move up quite a lot though from the bottom already. Just be careful. So that's about it. So thanks for watching, guys. I'll see you guys in the next one. Take care.